Time for Futures in Focus. President Trump's criticism of Fed rate hikes and the weak foreign currencies is dragging down that dollar. Let's bring in Phil Streible of RJO Futures at the CME. Talk to us about this move down 0.6%. King dollar no more.
Yeah, I mean, if you look at Trump criticizing the Fed for raising interest rates, remember the U.S. economy has been doing quite well, unemployment rate at record lows here. So, of course, the Fed's going to be raising rates. So I don't necessarily agree with him on criticizing the Fed. And if you look at the manipulation of China and their currency and also the EU, he's probably right on with China. They probably do manipulate their currency lower because of the cost of their goods are cheaper. But on the EU, I think he's got that one wrong, too. Remember, they're just behind us on the Fed, on their own EU raising rates over there. They've faced a migration crisis, also a debt crisis, and there's a lot of uncertainty with Brexit. So, of course, you know, the U.S. is going to raise rates faster, strengthening that dollar, where those other currencies are going to be behind that curve there. So the euro currency is going to lag in value. I think the dollar index, if you look at 95 as a resistance point, if we could break through there, then I'd say the dollar is probably getting stronger again. But we're probably going to have a consolidation right around this point right here for the moment being.
And so, Phil, I mean, many would question whether or not indeed China is a manipulator of its own FX. Many have walked President Trump away from that thought after the election. But talk to us about the dollar move. What is actually driving it? Does the market in any way think that Trump's tweets will have an effect on the Fed?
Yeah, so the way it's supposed to operate is the Fed has to work completely independent of politics and of, U.S. policies. And it's just supposed to focus on the numbers here. I expect the Fed to continue its interest rate hike pretty aggressively. So we should probably see 2 more interest rate hikes this year, one maybe in September and another one in December. So I don't think that they're going to stop at all on that.
Talk to us about copper, because we've been seeing it fall out of bed. I'm looking at miners in Europe. They're down significantly compared to the rest of the stock 600. How much is the trade tensions hitting metals?
Well, I mean, with him increasing, the trade talk about $500 billion, that's definitely going to put some pressure. If you look at Shanghai, they have ran down some of their stocks about 10% over the past week, which has supported prices this morning here. And especially with a little bit of that dollar weakness, that's going to boost copper prices. However, I really think we could see a washout down to 250. I mean, this is going to impact China's economy, their spending, and their growth altogether, as well as a lot of different areas around the world. So I don't expect copper demand to pick up too much at all. So any kind of rally there, I would expect it to be met with short selling.